private sector gold demand in both India and Russia are now at 6-year highs. So while the paper gold price in US dollars continues to be manipulated and held in check in a trading range to discourage most Western investors, you have private sector investors in India, Russia, China, other parts of Eastern Europe, Germany, and Asia taking advantage of artificially low gold and silver prices. Same thing is true for central banks, which are enormous net purchasers of physical gold. As I've covered in many videos in 2021, central banks that have not bought physical gold in the last 2 or 3 decades are making enormous tonnage purchases, whether that is Brazil, Thailand, Poland, Singapore, tons and tons of others. So there is a big pickup in physical gold demand out of India and Russia lately. It is an enormous increase compared to the past, a 6-year high for both. And I've covered also in recent videos that the other main driver of physical gold demand is out of China, private sector demand in China. So besides central banks, you have enormous private sector demand increases for physical gold, both for investment demand and also for jewelry demand out of mainland China. And a lot of it has to do with Chinese government policy. They have the crypto ban for regular Chinese people. You have real estate prices in China that have been falling for the last 3 or 4 months. This is the first time in a long time that real estate prices have fallen that much. And this may actually be the first time in decades that there's a bear market for home prices in China in many different cities. So this has not really happened before. The bust that a lot of people have been predicting for real estate prices and real estate that a lot of people were predicting in 2008, 2009, 2010, 2011, and 12. A lot of people like Jim Chanos and others, they were predicting it a while ago. They were way too early, but it finally appears to be happening now in China. And because real estate prices are falling, because Chinese people are not allowed to, regular Chinese people are not allowed to buy crypto, a lot of that capital, that savings, is going into physical gold, physical silver, and physical platinum now. And this appears to be the case as well in India and Russia. In 2020, you had the Indian Central Bank. In order to run record trade surpluses in 2020, they helped prop up the US dollar. Their central bank printed a bunch of their own currency and then bought US dollars with it to help devalue their own currency. And this is a problem with stagflate, tax lie, and devaluing your currency to boost exports, or as many people would call it, either mercantilism or neo-mercantilism, is it eventually creates a lot of inflation and currency problems in your own domestic economy. And this is what we've seen now in India with a lot of inflation going out of control there for a while now. So gold demand is starting to come back, and I've covered also in recent videos that Indian silver imports have also had a big spike in the last couple months, that they have not been at these levels since I think 2015 or 2016. So there's been another big spike in Indian silver demand as well. So overall, while the paper gold and silver prices in US dollars are either going down or stuck in a trading range, there are people taking advantage of this. And again, on the supply side, the miners are not going to be bringing on a lot of new silver supply. You have a lot of restricted policies from governments, either new taxes or pulling of environmental permits, making it difficult, where a lot of mining companies in either Mexico, Peru, Chile are either thinking twice about investing in additional projects, investing in new mines, or expanding production. So if this continues, you're going to have supply problems. There's already supply problems, but there's going to be even worse supply problems coming down the pipe. I was just looking at a chart of the actual physical copper in inventories in warehouses to be delivered for futures contracts, and there's not that much copper because I guess a lot of Chinese investors, Chinese speculators, Chinese government entities that are some of their shell companies have just been stockpiling so much physical copper that there's not a lot of physical copper left in warehouses, especially I think the London Metals Exchange warehouses, to be delivered for these commodities futures contracts. So there's going to be supply problems down the line, even though commodity prices, like the copper price, has gone from, in early 2020, I think it got down to around $2.20 or $2.30 a pound. The last time I checked the copper price, it was up to around $4.30 a pound. It was still holding pretty strong. So that's a big increase. However, if you're the government of Chile, they're the world's largest copper producer for annual copper production. They're looking and seeing, because they're the Saudi Arabia of copper, their government is looking at increasing the taxes on copper miners. But that's a double-edged sword. It can come back and bite them, because a lot of copper miners then either will cancel projects, cancel investments, or won't make investments. So that's the trade-off. And unfortunately, politicians, bureaucrats, regulators don't really think about this, don't really think about long-term consequences like this. Everything is so short-sighted, so short-term oriented. But that's what's going to happen, is that the more these governments try to put tax policies on, it's going to create even more supply problems for a lot of these commodities producers down the line. So the bottom line here is that private sector physical gold demand out of both India and Russia is now also at a 6-year high. It is not the big increase like what we're seeing in China. There's videos in China where there's lines around the block in many major Chinese cities, but I would say it's along the lines of an increase similar to what's happening in Germany and some of the in Eastern Europe. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 190 articles and audio podcasts behind my paywall, exclusive for patrons, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And just in the last 3 or so weeks, there are 6 new audio podcasts out on a lot of interesting topics: the uranium market, the Q3 update for gold and silver miners, royalty and streaming companies, an update on the hot meta news for Sandstorm Gold. There's a new deal that Sandstorm Gold announced on Friday. I'm going to try to get a mining news and analysis podcast out in the next couple days about some of the mining news that's out. There was some interesting news stories about Pan American Silver, Fortuna Gold and Silver, and Sandstorm Gold. So I'll try to get a audio podcast out about some of those things out for patrons in the next couple days, maybe hopefully this week. And just in the last 23 or so weeks, there are now 36 new articles and audio podcasts. So there's 36 new articles and audio podcasts out in the last 23 or so weeks, and 6 of them out in just the last 3 weeks. All for the cost of a Starbucks cup of coffee per month. Think it is worth trying out if you want far more in-depth content, research, financial education, and analysis. So if I could wrap up this short little video very quickly. Yes, the paper gold and silver price in US dollars, which is heavily manipulated still, is not doing anything. You have all these global macro hedge fund managers that anytime the dollar index rises, anytime the Fed says it's going to raise interest rates, basically anything the Fed says, they want to short paper gold in US dollars. You see all the, if you follow these global macro hedge fund guys, the mainstream ones, the deflationistas, they just spend a lot, ridiculous, disproportionate amount of time making fun of people in the gold community. However, if you want to objectively and realistically look at what's happening in the gold market, on the demand side, there is enormous physical purchases, net purchases by central banks of physical gold. The tonnage orders are enormous. There are enormous supply side problems. A lot of new gold mine supply is not going to be brought online at current gold prices, and costs are up a lot. Normally when this happens and equity available to gold miners and juniors disappears, so gold miners cannot raise equity, juniors cannot sell as much equity, they will publicly say that they're fine with their balance sheets. Meanwhile, they're going to be looking to do buyouts or sell the company out privately. Unfortunately, with juniors, this happens. Maybe I'll do a separate podcast on that. But the larger precious metal royalty and streaming companies like Franco-Nevada, Wheaton Precious Metals, in this environment, they normally take advantage. So if you've gone back over the last 10 years of whenever mining companies had trouble raising equity, when metals prices went into a bear market or a mini bear market, and mining companies, their profit margins shrunk and the mining companies couldn't raise equity, it was the larger precious metal royalty and streaming companies coming in, filling the gap, doing streaming deals or royalty deals, and taking advantage of this. And that's what's going to continue. So you have people buying physical metal in China, India, Russia, Eastern Europe, Germany, and then you have central bank purchases. And this gold tug of war where on the demand side, there's a lot of people outside Western countries buying enormous amounts of physical metal and central banks that are enormous net purchasers of physical gold, versus the global macro hedge fund guys that are mostly deflationistas that want to short gold, want to short paper gold, want to short the mining stocks every chance they get. So that's why gold is staying mostly range bound now. Although if demand continues at this pace or increases and supply does not come online, eventually in the next 12 to 18 months, you will see much, much higher metals prices if demand continues to increase at the current pace or increase more, and there is not a lot of new supply brought online.